The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade on this Monday. Before we get into the charts, let's take a look at what traders are watching out there. Well, US President Trump has said foreign governments would have to pay a lot of money to lift sweeping tariffs that he characterised as medicine, as financial markets indicated another week of steep losses. European Union countries will seek to present a united front in the coming days against President Trump's tariffs, likely approving a first set of targeted countermeasures on up to $28 billion of US imports from dental floss to diamonds. And Asian stock markets plunged on Monday as fears of a global trade war saw Wall Street futures dive and investors wagered the mounting risk of a recession, which could see US interest rates cut as early as next month. Futures market moving swiftly to price in almost 5 quarter-point rate cuts in US rates this year, pulling those treasury yields down sharply and hampering the US dollar. All right, well, let's get across the charts to see what they're telling us right now. Michael Gable joining us on Fairmont Equities. Michael, welcome. I'm not making your job easy, am I, this morning, because everything is moving so rapidly at this point. Why don't we focus, obviously, what we're seeing in the here and now locally on the local market?
Yeah, obviously everything looks pretty ugly at the moment. So, we try to pull up our charts and look for possible areas of support, but it's one of those sort of situations you need to wait to see that support come in. Obviously, that big blue line, which was the breakout from early last year, we've now fallen under that blue line. Look, I think we're approaching sort of levels where, looking at previous turning points in the past, could offer some support, but at the moment, the market's moving pretty swiftly. So just have to, as I said, just wait for, that sort of washout to occur. And then when you see the reversal, you're ready to buy. And to be honest, I'm obviously, well, maybe not obviously, but I'm in the camp that you'd be looking for buying opportunities. I mean, the time to sell was obviously a few weeks ago or so. After these sorts of moves down, if you think back to COVID and you think, wow, that was a fantastic opportunity to buy. I wish I, did more at those lows. Well, I mean, we've almost got a similar sort of move, but this is all, pretty much created because of Donald Trump. We don't have a pandemic out there. So just as quickly as this has all started, it can just as quickly turn around.
Mind you, with COVID, obviously we saw that massive stimulus come in, which then sent the market soaring higher. I guess it's debatable whether that's going to come, given, particularly if we're seeing inflation on the rise.
Yeah, well, I mean, up until we saw all those tariff rates last week, the market was only down about 10%. So again, we're probably one press conference away from seeing some of that fear unwind. We're seeing those moves in yields, and clearly, as we've mentioned on the show before, I think their aim is to get those long-term yields down so they can roll over all of that serious debt that they have. Look, I'd be looking for opportunities this week. I mean, the market can bounce just as hard as it's fallen. And, I think that's the sensible thing to do at this stage. I mean, obviously there'd be people out there thinking, you're crazy, the market's down quite a lot. It could go further. Yeah, it can, but you'd get a pretty decent relief rally even if it could go lower again. So I think at this point, you don't want to be selling into what we're seeing today. There will be a relief rally bounce, and I think after that bounce, you can start to make some sensible decisions.
We'll certainly talk of more than a correction, that perhaps we're entering a bear market. Let's take a look at what we're seeing on the US market, and what are you seeing here?
So the US market does tend to, I guess, behave in a bit more of a, I shouldn't use the word predictable, but what I've got here is a weekly chart of the S&P 500 going back to just before the GFC. And the blue line is the 200-week moving average. And it tends to like that moving average. It tends to bounce off that. So as we could see at the far left-hand side with the GFC, yes, it did fall under that blue line, but it did spend a few weeks bouncing off it. And that's what I'm expecting at this point, some sort of bounce off that 200-week moving average, and then you could reassess it at better levels if you're still comfortable with the stocks that you're holding. And apart from COVID, where very briefly it dipped under and bounced back up, any pullbacks have tended to respect that 200-week moving average. So look, that's about 400 points away. The US futures are down about sort of 3 or 4% as we speak. So potentially you've got another down day or two in the US before you see some sort of relief rally. So as I said, if the US is already down, let's say 20%, and you've got another 5 coming, we're closer to the next bounce. I wouldn't be selling anything here. I'd be looking for opportunities to buy. But then, of course, the next question is, after the relief rally, what does the future have in store for the market? I mean, will all stocks just continue on as if nothing happened, or do we get a rotation into different sectors?
Well, amidst that volatility and uncertainty, of course, we have seen gold go from strength to strength, although it has now taken a tumble. Let's take a look what you're seeing with gold, perhaps some forced to take profits there to cover their losses.
Yeah, look, I think gold still has a nice trend to it. It's clearly been swept up in what's happened in the past couple of days. As we know, up until Friday, gold was hitting all-time highs. So very resilient, which is a good sign. Gold could pull back to about 2,800 US, and for me, it would still look good. So I'd be a buyer on any dips. So as I just mentioned, the question is, when we get the relief rally, where to from there? I think we could see more of a rotation into commodities. So if we have a look at resource stocks, their valuations as compared to the rest of the markets, as cheap as they've ever been. So we may well get a situation like what we had about 25 years ago, where the US markets, they did struggle for a number of years, but the Aussie market did very well as we entered a commodities boom. So resource stocks did really well. Gold did very well. Now the reason why I say that is we've had this period of 10, 15 years of low volatility, almost predictable markets. The rise of passive investing. Tomorrow looks like today, so you buy a tech stock at a PE of 100, and that's okay. Everything just continues to edge up. But if we are entering a period of more uncertainty, then some money will flow out of those sectors, and I think they'll move into the vastly undervalued resources sector, just like what we saw about 25 years ago. So, look, I think broader markets will see a fairly savage relief rally, possibly starting this week, even next week, and then you can reassess if you want to exit some of your exposures, which were basically benefiting from that sort of passive investing of the last 10 or 15 years. And if you want to then rotate into whether it's gold or other commodities, which could see some decent buying.
Michael, great to get across what you're seeing right now on the charts. Thanks for joining us in Fairmont Equities.
Thank you.
And that is the trade for this Monday.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.